All righty. Good morning, traders. This is Blake Morrow, and you are listening to the Face Show. Happy Monday to you. And can you believe all of this going on? What a crazy way to start the weekend, with everything happening. I just want to give you guys a quick shout out. Hello. Good morning. I've got bedhead, so, hence the messed up hair. But, today was Martin Luther King holiday. We were going to broadcast anyway, just because there's been some volatility recently. Being at the beginning of the year, we're seeing a lot of flows. And obviously with what had happened over the weekend, how could we not have a show today? And my son actually my youngest leaves back to college today. So I was going to just say screw it with the shows and just go deal with that this morning. But no, I'm still wanted to make sure we had a show and make sure we talk about all this that's happening here. And what a crazy way, like I said, what a crazy way to start the week. And there's something that I saw. Well, let me just show you guys. So Michael Brown posted this. I was also reading it. I happen to be reading it on a Reuters article as well this morning, and I find this really fascinating. And I know if you guys at home, look, everybody's got their opinion of Donald Trump, the Trump administration. I don't, and we had this big conversation actually in the chat room this weekend or yesterday. Politics is what's driving the market right now. It's not, we have to talk about it. I try to keep politics separate from the markets, but sometimes it just matters. And I mean, this letter that Trump sent to Greenland, I mean, just read it. Considering your country decided not to give me the Nobel Peace Prize for having stopped 8 wars plus, I no longer feel an obligation to think purely of peace. So, I mean, what do you do with that? I mean, seriously. And that's the thing that you're like, wait, are you saying, he's saying that his ego was so bruised that he's like, well, screw it. Then we're just going to take over Greenland now. And I have to say that realistically, is not the case. And and I say realistically, no, his ego is probably bruised, but it is probably has fueled a lot of this. The question is, will it, what's it going to look like in the end? And that's kind of where we're at. I do think that we are going to end up having a bigger presence in Greenland, here within the next couple of years. I don't know how it's all going to shake out, but obviously the market's a little concerned about it. And to a point where we're seeing, obviously the euro, gap lower, but you guys can't short the euro on this type of news because it's risk aversion. You can see where stocks are selling off. When equities are going down, which they are, you can see we broke lower out of the wedge. When that happens, you're going to see a reversal of euro flows. Remember, the euro is a funding currency. It's a funding currency for risk taking. The easiest way to see that in probably the most apparent way to see it is let's go over to like the euro crosses, and you can look at the euro Mexican peso. The euro Mexican peso at the end of last week was absolutely destroyed. We are seeing some buying come in. And if this reverses, you're going to see the euro catch a bid, against other things. I mean, euro sterling's, it's slightly higher. We're not seeing it really percolate here, but those should end up going higher. Euro Aussie, Euro Kiwi. When euro crosses, and by the way, Euro Kiwi is really weak. I'm surprised to see it as weak as it is, but I think that's more of the Kiwi making a big move against the Aussie right now too. But when you start to see these euro crosses catch a bid, that's due to FX flows. I had some guy on Twitter come at me this weekend and said something like, I forget what I could go back and read what he had said to me. It was like, well, it wasn't to me necessarily. It was to like his followers, like, screw the EU and the bureaucrats. They're going to, FAFO, which is fuck around and find out, what happens, blah, blah, blah. And I'm like, man, I wish, and I responded to him. I'm like, I wish the FX was as simple as just that. It's not. The dynamics in the currency market are much more complicated than just saying, "Oh, your country sucks, so I'm selling it," or it's dominated by a lot of different flows in the markets, and there's a lot of, whether you talk about carry trades, funding currencies. It's not as easy as your country sucks, mine's better, I'm buying it. That does work, most of the time based on how a country's doing, but interest rate differentials matter, and positioning in the markets matter, and also dynamics on how we've been seeing flows. And in this case, I don't think that's really going to work. And that's one of those situations. And really near term, if equities continue to sell off, if we continue to see stocks, under pressure, you're going to see the euro probably get covered more, at least in the near term. When you look at risk on, risk off flows, and you say, well, when the stock market comes down, the dollar is bought. It's not one size shoe fits all. It's not that simple. If it was that simple, life would be very easy in the FX market. It gets more complicated than that, and I think you have to be very selective on where you're buying dollars against. The euro, once again, could really outperform, at least for a while. I do believe, and I'm gonna bring in Ryan and K-Man here in just a second. I do believe when we have severe risk aversion, meaning the bottom's fallen out of the market, we're down 20-25% off the highs, and you start to get in a quote unquote bear market, that's when the dollar really starts to get bought against everything. That's when people start to look around and say, "Ah, damn, I really don't have enough dollars right now. I need to look for some safety." Once you get into a bear market, then things change. But if you guys can't tell, and let me just go back over to the S&P really quick, we're what, 1.5% maybe off the highs, the all-time highs. I mean, where we currently trade. I mean, here's the all-time highs. We are 1.7%. If we we're trading down here and we were down, let's say, down around 5,500 in the S&P, and we were down 18%, I would definitely be thinking I need to start buying dollars, like across the board. But we're nowhere near that. Anyway, let's bring in Ryan to talk about some of this. And I did manage to listen to the Flow show this morning. Good morning, Ryan. Hope you had a great weekend. What's happening with you, buddy?
Morning, Blake. Had a good weekend. My football team managed to win for once, so that always makes things a bit better.
There you go.
Yeah.
I mean, so before we get too deep in the woods here, tell me about West Ham. They have a crappy season, or what's going on?
Yeah, I'm not going to go into it. We haven't had a horrendous season, but we beat one of our close rivals, which is always nice.
Well, at least they had a good win. A good win's always good enough to drink a lot of beer, I'm sure, with your buddies.
Exactly.
So tell me your point of view of what's happening here in the markets. Your viewpoint with, I mean, you probably got up Saturday morning and you're probably like, what the fudge sickle is just happening here? Tell us how you're feeling about everything that's transpired over the weekend.
I think the price action has shown it for what it is. It had the initial, call it an algo reaction at the Sunday Open. We saw the dollar strengthen, which has been the reaction function every time Trump has threatened new tariffs on something. He's threatened tariffs on eight NATO countries, 10%, which will go up to, that's from the 1st of February, that will go up to 25% 1st of June if there's no deal on Greenland. So we saw, let's say, the initial reaction was buy dollars, which we've seen all through the Trump admin so far on those headlines. But time you wake up in the morning, it's all reversed. So the market's sort of, taking it in its stride again. Stocks are a different kettle of fish. But I think we still got to look at this the same way we look at everything else. Is he really going to rock up with military and invade the island? Or is he going to get something done? They've already got bases over there. They've already got agreements that they can have infrastructure, military bases. They've had stuff there since the Cold War, World War II.
Right.
So what does he want to do? Obviously, there's the natural resources, rare earths, and whatever. That's probably the biggest play of them all. But even if it is a defense against China and Russia, they've got bases over there anyway, so they can just make those a bit bigger, I suppose. But as far as the market's concerned, I think you've got to play this the same way we've played every tariff threat so far. Watch for those spiky headlines, and then remember that the end game is to get a deal, not to have those tariffs in play at any point. So, yeah, I think this is going to go the same way. We've got this Davos later. He's speaking. That's going to be a fun event. No doubt he's going to go to town and off script as he usually does, and that's probably going to bring us a bit more volatility.
Yeah. Oh, and by the way, RJP, we all know why Greenland is strategic as far as importance goes. We all understand that. Everybody understands that. The question is, how big of a presence will the U.S. end up having over there? And as I think K-Man, you mentioned it in the chat room, Ryan, you mentioned it, like with the NATO agreements that are currently in play, we are going to end up having a bigger presence there. If this is truly what the reasoning is, if it is more for control, is it more for sorry, it's early in the morning. By the way, I had the worst sleep last night. My son's leaving, and I just couldn't sleep last night. He's going back to college today, and so I just had a really bad night. Rare earths is what I meant to I was trying to get to here, Ryan. If that is really the play, then maybe it is more than just military presence. If it's just military presence, we will have a bigger presence in Greenland when it's all said and done, which I believe will be the case ultimately. But yeah, we're just trying to figure out what the end game is going to be.
Yeah, it's both. It's to have a bigger military presence and to go after the rare earths.
Yeah. So it's gonna be really interesting to see how it all plays out. Let's bring in K-Man. What are your thoughts here, K? You probably got up this weekend on Saturday and said, "What the hell? What the hell is going on?" So what's happening, K?
Well, it was kind of coming. He already threatened something about Greenland last week, but the tariffs was a bit of a strange one, that letter.
Right.
What I'm thinking about all this, I really at this point in time don't know what is really going to happen. It is a fact, and if you look at its history, politics, history, that Russia and China have been maneuvering in the northern hemisphere towards the Arctic, etc. The problem is, again, the way it's been brought up. Like, I'm going to go after Greenland. You guys can't defend it. I should be there. There's enough treaties, and I've posted one in the room. I was looking for it, yes, last night, because I already saw that last week. Since after World War II, 1951, there's a treaty that says that America can increase its military presence again in Greenland. So this whole thing, and it's from both ends, because I'm very surprised that NATO and or Europe hasn't come up with this treaty. It's like a whole circus again. The problem is always the way it's been brought on. It's like, give me that, or it's gonna end up badly. If it's again a negotiation tactic, yeah, we may end up. I don't know exactly what the finality will be, but I can see some maybe even joint presence, US, NATO, etc., getting a bit bigger in Greenland. But yeah, if it's due to partially at least due to minerals, oil, gas, Yeah, there's obviously a commercial ID behind it as well. So yeah, I don't know how to really react to it market-wise. If you look at it, if you take it for the face value of it, slapping tariffs on because the UK is in there as well. UK, a few European countries, Norway, etc. I don't actually see a very reason right now to buy either of them, to buy dollars, to buy euro, to buy sterling or so. This I don't really see the reason. Maybe there's going to be a more apparent reason coming, and I'm thinking, as I said on the Flow Show, maybe there's going to be a lot of meetings, side meetings in Davos, because it's the biggest American delegation apparently ever going to Davos. So we may expect a lot of side meetings, and then perhaps we will see things a little bit clearer. After
Yeah,
that.
it's gonna be an interesting one. You know, the K-Man, the initial response that we've seen, and this is something that I do want to make sure we discuss. Obviously, equities are lower,
Yeah,
even
that's
though
the obvious one.
yeah, the futures are down. Euro bounced back, you know, so the dollar's just weak. I mean, the euro gap lower, and you know, as I was pretty vocal on social media over the weekend, you have to buy the dip in the euro, and we gap at 115.80s and we ripped. I bought some euro at 115.86, I think, yesterday. And so the dollar is coming under pressure. But yields are coming under pressure.
No,
So,
yields are a
or I
bit
mean,
higher
excuse
actually.
me, fixed income's coming under pressure.
Mm.
Yields are ripping. So this is a sell America story right now.
Mm.
And that is something that is everybody's got to be aware of at this moment. Fixed income sold, equities sold, dollar sold. So how does that make you feel, K-Man, based on your experience in the markets?
Well, we have to go back to what happened after Liberation Day in the States. We had a pretty much a similar kind of picture, right?
Right.
Bonds got sold, dollar got sold. I don't even recall what equities were doing, but I think they must have had
Oh,
a
they
little
got
slap.
killed.
Yeah,
Yeah.
exactly. They must have had a slap. Is the same kind of move, albeit in a lesser to a lesser degree, because the market has the experience now with what it means, which it did not have back in April. So the moves are smaller, but they look very similar. Also, metals got really bought up severely at the time. So it's still the same play. I don't disagree on the side of it, but we've also seen that at the end of the day, there's arrangements made, and some tariffs came back down. People go sit around the table. And it could all like fizzle out. Now, again, I don't disagree on the move. We've already heard from other big money managers that they don't think that we've seen the end of the diversification out of the US. I don't disagree with the move. I'm rather on the short side of the dollar, but I'm not really. Short side dollar because of risk off. That's not the reason. It's a bit of maybe a more global thing of diversification out of, but not because of risk off. And
Yeah,
yeah.
that's what it is. It's a diversification out of the dollar. Look, this is an argument I've made all year, all last year. It's this year just started, so all last year. If you're an asset manager and you have, just a pretty large asset manager, and you're controlling a lot of money, and you're like, I'm, I don't, I want less dollar exposure and U.S. exposure because of the nature of the Trump administration. It's not because everything is at risk because of the volatility. And then you turn around and you go, well, wait a second, I'm buying Europe because Europe is, there's zero growth there, but I'm buying, sterling. Why am I buying sterling? Ryan, as Ryan says, the UK sucks, but there's more stability there, and I think you're going to continue to see that as a risk to U.S. assets right now.
But you say that, but the dollar is continuing to strengthen this year. You look at euro dollar, stick it on an hourly chart or something like that. We're still in a downtrend.
Right. Well, that's earlier this week until this weekend. Right.
Well, no, we got up to 1640, which is another lower high. We made a lower low, a new lower low. The trend has continued. We've seen this all year, in the latter part of December and in this year. Yeah, okay, we're going to get these big spike moments, but we're not turning around that trend by any way, shape, or form yet.
The day is still young.
Where are all these big dollar sellers?
Well, they're definitely not buying they're not buying the dollar here in mass. I mean,
not today, but if you're talking big investors, they don't day trade. They're not
they don't.
But
isn't this Ryan? Isn't this a really big sign of this is 2025? That was post Liberation Day right here. That's Liberation Day, and this has just been a consolidation. And you're probably going to get another move lower in the dollar eventually, and especially if risks like this continue to mount. I mean, you're going to get people to say, "F it, I'm not going to own the dollar anymore. It's too risky."
No,
and how about if economic data actually turns? I mean, this is
why are we getting consolidation?
In light of the U.S. outperforming right now.
Why are we getting consolidation in euro dollar?
Why what?
Why are we getting this consolidation in euro dollar since the summer?
Why we're getting consolidation? Because I believe that the U.S. still is outperforming the rest of the world. And the dollar still can't catch a bid. I mean, the euro went from 118 to 115.
You Yanks like to think that everything revolves around the US and the dollar.
It does.
One of the reasons why we're getting this consolidation is, yes, because the market was expecting the US to crap the bed economically, and it hasn't. But also, what's happening in Europe? Rates are down where they want to be. There is no rate divergence trade from the European side. They got their rates to where they want them. They got inflation, so they say where they want them, and that sucked out the reason for any part of that trade. And we've had this sideways action since the summer. So if you look at this trade from the euro side, there's nothing, there's no input into it anymore. So there's a reason to not pile into European assets anymore. Because what growth have they got over there? 0 point this, 0 point that.
Again, the
euro didn't rise because last year, because Europe was so fantastic and booming. You made that point at the start of this conversation about why people go into currencies. So it was all about the dollar and the market expecting the dollar to crap out and the US to crap out. It hasn't. I'm just saying, I don't make you wrong on that long-term picture that this is just potentially a pause from the 2025 rally, but the year has started with dollar strength, and until that changes, that's the mood the market is in.
Well, I still believe that if we're in a range and we're at the lower end of our range, and plus, by the way, here's the 200 DMA that we're basically rallying off of in the euro. This is just a consolidation before another leg lower in the dollar. And if you want a reason to be out of the dollar, you just got another one this weekend. And so that's why. And euro is no place to where you really want to have your money. But when you're talking about fiat and it's one against the other, and the U.S. or Europe, I mean, I still think people are going to choose the stability of the euro over growth, and it's surprising to me that we continue to see outperformance in the U.S. economy versus other economies, and all we got is a move from basically 118 to 116 in the euro. That's it. That's all we got. And so I don't know. I don't think that I don't think the dollar is the place you want to be right now. But again, this is what makes a market, and we're going to trade it as such. So I don't mind being long euros here, not at all. But let's talk about we got just a few minutes before we're going to wrap up the show. Again, this is more of a holiday special, if you will. We don't even have a guest today. But I want to talk about how this is going to play in Davos this weekend. Ryan, what do you think with everything that's happening when the World Economic Forum? I don't know, is Trump scheduled to speak? I think he is.
Yeah, he's got a speech scheduled. As I say, he'll probably start off with a script and then just wobble all over the place as he tends to do. He'll be giving it to people left, right, and centre. As for the rest of it, it's going to be the usual bluster. The odd central bank speaker popping up. There's, as you said, there's a big US contingent going over. Probably not going to get too much on the monetary policy side because everyone's in the blackout and whatnot. This thing is usually a bit of waffle, and I think that everything's going to be on Trump. But also, don't forget, tomorrow we play the SCOTUS game again.
Yeah. How about that? Yeah. We'll see about that.
Exactly.
Man, what do you think about the World Economic Forum there in Davos? What are you going to be looking for, if anything?
No, I think the highlight everybody's waiting for is Trump's intervention on Wednesday, and but I think we shouldn't ignore a lot of those side meetings. So we are going to have headlines galore for 4 or 5 days. I think it lasts until the 23rd. So the whole week is going to be packed with comments from anyone who is over there, because all the media will be all over people to get comments all the time. So for the rest of the week, those people trading sterling should be interesting as well. Tomorrow jobs report, and on Wednesday inflation report. So sterling is one that I'm looking at for a bit of a move over the course of the week.
Speaking of, I'm sorry, I didn't mean to interrupt. I just realized we only had like a couple minutes.
Canadian
I forgot
CPI.
We have Canadian inflation coming up here in just a
CPI
moment.
up in about 2 minutes.
Yeah. So I forgot when I did the week ahead videos on Friday. I'm still a little under the weather. It's like I haven't been able to shake it from last week. And I remember, on Monday we had the Canadian CPI. So we're going to take a look at that and see what the CAD does. Do you have any CAD exposure still, Ryan?
Yeah, I'm still long a little bit, waiting for this break of 139.20 if it happens.
Okay, all right. You still think it's possible? I am more of a Canadian bear than anything, but I don't know really how to play it right at this very moment in time. K-Man, what are your thoughts on the Canadian as we get into this?
Also a bit driven by economics. We had Carney over in China, but then over the weekend he said as well he would not be averse to sending a few people to Greenland as well. It's a bit of a mess on the political side too. But there's still a big diversion. And then if you look at especially USMCA related, there's still a big diversion between the Mexicans really wanting to still be on the right side of the US, which is causing the Mexican peso to remain bid, and then Canadians who rather are okay to go head to head. So maybe on that side, the Canadian dollar is going to remain on the slightly weaker side of that play. But then the rest, I don't know about dollar CAD, to be honest. Right now, right here and now, I have no strong opinion. I know that 139.40 is a big level as well. So.
All right. Well, I just pulled the data flash off of, if you're on Forex Analytics, you can pull it right over here on the calendar. I just pulled over data flash, and we're going to keep that up while we look at a 15-minute chart of the dollar CAD. We've been in a pretty tight range near these highs. So let's see if we get any reaction here. Stronger.
Hot on the headline.
Yeah.
But one of the core measures was a bit softer. The Bank of Canada core
The
measure was a bit softer as well.
the year over year, month over month. Interesting. Well, I wouldn't be chasing the dollar CAD lower then as a result. All right, I'm gonna just real quick, just because the dollar CAD's really not moving. We're gonna have to take a step back and look at the bigger picture of things that are happening. I just want to say that today, obviously it's Martin Luther King holiday. For those of you I celebrate too. I just want to say happy Martin Luther King holiday for everybody in the United States. It is a great day. I usually take today off, but because we had the Canadian data and I didn't know what was going to happen, and over the weekend, obviously, but because of that happened, I'm going to be sitting in front of the computer a lot, even when I'm going to try to break away to take my son to the airport today. If not, I just might leave that to my wife. But I do think that today we should be paying attention to what's happening in precious metals. Obviously, if you listen to the Flow show, Ryan and K-Man both talked about the explosion in gold. Obviously, the gold market is at the 161% extension now, or closing in on it rather. We're getting very, very close. And that's of this last consolidation. So you can see the October move. We're almost at the 161% extension, and which would be a dual confluence of it, because the last dip, we're almost there too. It comes in at 47.20. We were looking at that level last week. Obviously, if you're in the Forex Analytix community, you can see it's the level that we were paying attention to last week on a bullish breakout, which we're doing. Guys, real quick before we wrap things up, I want to go back to both Ryan. I'll go to Ryan first. This euro move, I know you and I just had a little bit of a debate on how you feel about the euro, which in my opinion, it's healthy to have. It's healthy to hear both sides of the market.
Absolutely.
I'm a euro bull. I'm obviously looking for a move above 120 eventually. I'm in the Grega Horvat camp. By the way, Grega just he mentioned this morning he's been with us for 10 years. So it's pretty awesome. But he'd been looking for a move in the euro, to break out higher. I'm in the same camp. But what are you feeling about the euro or the dollar as we head into the remainder of the day?
Well, opinions are one thing, trading's something separate. As much as I see the dollar being stronger in this one since the start of the year, I'm looking to be a buyer down at 115 if it's seen, because that's one of my big old levels.
Good luck, buddy.
If I get that, then I'll be looking for 120 as well.
Good luck, buddy. You're going to be chasing it above 118, and I'm going to be laughing the whole way. Look at Ryan go. Just kidding.
Okay, go and have your date with your hairbrush.
All right. K-Man, what's your takeaways from the action this weekend? And by the way, just to answer Michael Weissman's question, we will have a morning edge in about 42 minutes. So I'll see you guys there. K-Man, what are your thoughts about the dollar as we go into today?
I'm a little long Aussie and I'm a short dollar mech. So my view on the dollar, but selectively, I still think it's a case to be selective. I think we need to see euro dollar break that 116, what is it, 60, 70 or so, and then we can start to really move higher. I actually tiptoed in a very, very small long on the euro dollar just because of the price action. But I really want to see it start moving, and I won't mind if I have to buy and pay up, not at 118, but a bit higher. Should be very interesting. I actually would love to see a real test of the mid to low 115s to then to get the confirmation that this has been a low. The big money managers thinking about one thing, but they don't trade every day either. So there is still room for a bit of moves that may be a little surprise to the dollar upside, and then see what happens. But I mean, we can.
Good luck, gentlemen, seeing
Mhm.
that 115.50 to 115 level. You're going to be just chasing it higher. I'm just kidding. All right, I had too much coffee. I'm gonna go. Hey guys, it's been real. Love having you guys here. Thank you so much for your updates, both you, Ryan, K-Man. You guys are amazing. And we'll see what shakes out with the euro. I do want to point out though is K-Man was just talking about the 116.70 level. You see the 50 DMA? It's right there. There's the 200 DMA. We bounced off it, so we get above that 200 DMA around the 116.55, 116.60. We start breaking above that, it could accelerate some things a little bit. Just keep an eye on it. Jokes aside, I do think that the dollar is the sell America trade is back. I don't know if it's gonna stick, but it is something that we'll probably have to be paying attention to as we have the Supreme Court ruling maybe tomorrow. We also are looking at a potential new Fed chair, whoever that might be, and it looks increasingly like it's not going to be Hassett as days go on. But we'll see. It's going to be an interesting one. So the best place to be with all of us guys is in the chat room. You want to have these conversations, just go in the Forex Analytics community. By the way, if you don't know where the chat room button is, I've had people go, where is it? It's that little icon right there, which ironically looks very similar to some other things that you might have seen. But yeah, you just click on that little button right there. You end up in the chat room with us. And when you're in the chat room with us, you can have these conversations like we had all evening in Asia last night. And you can go scroll back and see what everybody's talking about. You can see what positions everybody's taking. Not just myself, K-Man, Ryan, but a lot of really, really great traders are in here all day long. So best community to be in my opinion, as we've curated it, for the last 10 to 20 years. Some people we've been chatting with for 20 years now. So, guys, gals, I hope you have a great day. I'm actually going to break away and go record a quick podcast for Spotify. And then I'm going to see those of you in the Forex Analytics community on the Morning Edge in approximately 35, 40 minutes. So thank you, Ryan. Thank you, K-Man. And thank you to all of our dear listeners. We will
Cheers,
catch you
mate.
tomorrow.